we go. There we go. Finally back. Finally back after a little hiatus. I had to take some time off. All of you in my Discord and people that know me personally and that follow my Facebook know I've had tons of stuff to deal with. My dad's been extremely sick and he passed away last week, so I have been just really swamped with trying to deal with all that and come to terms with it. So I'm feeling a little bit better, and life must go on. So I'm back here today. Let's start off right here with the DXY. We all know the price of the dollar is what drives these markets. And right now, we may be getting a little sign of hope for anybody that wants to go long in these markets. And it may be short lived or temporary. We're going to have to dive in and see. But I have the weekly DXY chart pulled up right here. And what we're seeing is you have Class A bearish divergence appearing right here between the MACD and the candles. That's giving us a little hope that we might get another rally. We've had them already. We've had them over the last couple of years in this bearish turmoil. And you're going to get these bear market bounces. But then you're also going to have to keep your eyes peeled for a pivot point in the economy, in markets, in Federal Reserve's mannerisms. And that's what everybody's waiting for. A lot of money on the sidelines. Then again, there's a lot of money playing this market to the short side. Has been. We have been playing it to the short side with that bias a lot. And as of now, I don't see a whole lot of reason long term to change that bias. But in the short term, over the coming week or so, we could see something. Now, if you look down here, we can see that we lost all this positive momentum, but it underperformed. And that kind of tells you that it could easily do it again. You can't expect too much right now, but this one lonely red candle, that was it. I mean, you look right there. This is the weekly. So we had one really, really, really bad week for the dollar, which means we had one really, really good week for stocks and assets, and followed it up with a horrendous week for assets after the dollar bullishly engulfed. And that's the way it is. It's kind of inverse correlated. If you've been here before and listened to me preach, I think this is the most important indicator that we need to look at to find our edge on markets. And when the dollar's pumping, stocks are dumping. Okay, crypto is just a tech stock. That's all it's ever been. That's the way it trades. For years in the beginning, I thought the same thing. Oh, it's going to decouple and it'll be its own. No, it's not. Because the same, and I know why now. I was young and stupid. The same people that trade stocks trade crypto. That's all it is. If you trade Tesla, you trade crypto. You can't say it's an uncorrelated market. It's all about making returns on your money. So the same people trade them the same way. Pretty simple. That's the weekly. We can go down here to the daily, which wonderful. More really like I don't know news. We had just a stupid little spinning top candle today. Indecisive. It could go either way. We kind of started building more negative momentum on the dollar. So I want to lean towards, I bet our next one comes down and touches this line. We'll see. You've got the 4 hour and the 1 hour. They're kind of wanting to show a little positivity, but nothing that I'm too excited about. This even, you could probably screw this into some kind of pattern. We could go something like that if you wanted to, which is just a continuation pattern. But inside of that continuation pattern, you see we've had down day, weeks, months, up. So we can continue, we can bounce off this. We can get another day or two of price action to the downside during this week's earnings fiasco and get some nice pumps throughout the week, and then turn right around and start to run up again and test this trend line, break it, and continue on. We've done it multiple times. You can see here, We had kind of a descending channel multiple times. That what did it do? Yeah, we got some week long pumps in the traditional markets, only for it to break out and run again. And that's just how markets work. And you start to identify that, and you can start playing that trend when you get it identified. It's like, okay, we're in this channel and we're getting down to 75% of completion. Bam, and then you can turn and flip with the markets. But that is the dollar today. One of the things we want to look at is we had some bank earnings come in. Now, first, let's look at the overall markets. We'll come back to this. We got the DXY. Let's see what the NASDAQ has going for it these days. And here's another indicator. And now I've had this drawn for a long time. And if you look, this is our medium line. This is our average trend line. It has the most touch points, and you can go under or over, and you're going to end up hitting in the same years, the same weeks, days. It doesn't matter one way or another. But this is your average trend line. It usually would bounce off of it in a bull market. Once we get below it, we're trending below it, and it touches it multiple times, tries to break through, starts again. So it just kind of gives you an idea that it tends to want to run around this line. And right now, what the NASDAQ has done, it tested as support. It bounced. We had some nice rallies in this bear market, as you can see. Multiple nice rallies. And we broke below it. And it looks like we probably will have, from the divergence going on here, you have triple divergence. Now, it's pretty awesome. It's Class A, but, because you can do that right there, you have Class A triple divergence on the weekly. But what does that mean? It means we're continually losing negative momentum, and we're going to try to head back up to test this line as either support or resistance. We got 2 weeks under us right now. We easily could have a big candle for the rest of the week, come up and touch that. Most likely we get this week and next drawing in these earnings, and then we will be at that line, and it'll have to make a decision. At that point, it puts us right about into when the Fed wants to come around, and it's so funny how this ties together. We'll be testing this historical trend line about the time the Fed announces their next decision. And personally, if the Fed feels like we're still coming in hot and is going to continually raise interest rates for the rest of this year in a big way, 0.75, maybe a full percentage to try and put the brakes on it, you could probably expect to see a rejection right there, and it head back down to these lower levels, which would make sense. But that would correct our charts the way we want to see them. So a lot of this is going to hinge on Fed decision, but we still have a little time this week, probably into next week, to get up there to that line and make something happen. When you start getting down to lower time frames, it doesn't make a huge difference. But if you're trading based on today's action, you can see, I'm going to remove this. You can see we're kind of doing it. So there's the RSI is kind of in bullish territory. So same thing. We're just looking at it smaller time. We're going to run. And we're the MACD. It's still building positive momentum on multiple time frames. So if you're going to have a bias, these swings are getting kind of crazy throughout the day. You can be a bullish bias short term, I think. But when you zoom out, you have to really take into consideration that you're looking at a prolonged downtrend. And where it stops, that is strictly dependent on the Fed.
That's all we can say. That's interest rates, Fed. When people start feeling like there's such value in the markets that they just can't that the returns of buying a stock become greater than this 4 and 5% they're getting on bond yields to be out of the markets. That's when the flip will come, and you'll see the pivot point, and you'll see money start flowing back into assets. Wall Street will start just piling in to something beat down. And you can see they do it in a big way. Back here during the COVID crash, you see that just huge dump. And when we got back down to that area of value, boom, that's just the way it always happens. This is more of a macro scale, so you've got to zoom out and look at things like this. Did we have a double bottom here? Yes. Typically, this is a higher low bottom, and it ripped, just a rip. So, where are we at here? Do we have anything that resembles that? Do we have anything that we're wanting to try and say that, hey, we're at a bottom? It could be. Maybe it's partial decline, but it's all about Fed talk right now and interest rates, and I just don't see us. I don't see us having a reversal and just boom back up to the moon again. Dow Jones, same thing. It's showing this that it's going to have some green days over these coming weeks, next week or two. So you can have a little bias to the upside in the short term, but you're probably not wanting to take longer term investments in IRAs and 401ks to try and something for 5 or 10 years. You're not going to go wrong wherever you buy, because in 5 or 10 years the market does what it's going to do. You may get trapped in a spot like this, but overall, long term, you're going to be fine. But right now, for some of you shorter term swing traders, you could probably play it to the upside a little bit more, and then we'll see. Every day is a swing for the fences in a lot of people's mind, but I'm just not wanting to do that. So yeah, they're all gonna. You got the S&P 500, Dow Jones, Nasdaq. They're all gonna do the same. They're all gonna do the same thing. Then we're gonna here look at Bitcoin. Bitcoin is typically following along. I had this drawn up for somebody the other day. So right here on Bitcoin, in case anybody's wondering what happened to crypto, is it dead? Does it look like it's dead? No, it's cooling off like it always has. Bear markets rally, bear markets rally, bear markets rally. That's what it does. So Bitcoin is fine. Bitcoin is doing what it always does. If you'll look right here, that's massive. We're going to change that. But that consolidation period right there, it is 126 days after our 50% dump to the bottom. We moved sideways for 156 days, 126 days off that bottom before we broke above that initial high. We're at 129 days, and you can see the similarities. I would not be surprised, which would make sense if it's following the traditional markets like it does, that we don't start getting that candle right there. I wouldn't doubt us getting a nice little rip to come back up here and start testing levels like 25.2 all the way up as 28.5. We can see that come back up and test. And then it's anybody's game if it holds. We've just been beat down for so long, it's kind of time for Bitcoin to get that rally. Honestly, it would only make sense for it to go to 25.2, 25.7, anywhere in that range. We're going to hit that 200-day moving average and probably get slapped down. That's the most likely situation there. So Bitcoin is still okay. Long-term holders, you're fine. Don't stress out. Ethereum's not looking much different. You can see we just have that. There's that same pattern playing out over and over again. Bam, 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 and then we start wanting to curl. We get a little bounce. It's just when things get oversold so much, you're gonna get that bounce. But it doesn't have to survive. It doesn't have to live long term. Everybody's favorite Dogecoin, still looking like a snack. I'm not going to stop buying it. I'm gonna buy Doge and Sheeb every chance I get, and Dogecoin's doing what it always does. It's holding up at higher levels. Now it's lost like 85 to 90% of its value, and that's okay. You should have done sold and been out, and been looking for that retrace, that 88% retrace to enter back in, which I did, and completely honest, I entered back in after 88% retrace from Doge's whole high. And where am I at? I think I'm sitting somewhere at like 8 cents. I mean, we're at 6 cents today. So yes, you're not going to time the bottoms and tops exactly. But I mean, buying at Dogecoin at 8 cents, if you're going in heavy, because you're like, okay, there's my retrace. We could go lower. We might not go lower. I'm okay with sitting at 8 cents, knowing that I bought that much closer to the bottom than the people that FOMOed in on Elon going to Saturday Night Live at 60 cents, 80 cents, 67 cents. That's not where you want to be. You're going to play the technical analysis, and you're going to get it down there at a manageable level. So, Doge is still okay. Hang in there. Very, very similar looks to Shiba Inu. I'm okay with that. We are well over a year since the birth of Shiba Inu, and it is doing very similar things to Doge. It has come down, and it tested this huge trading level after it opened up. We had a rally, very similar to Doge. They follow each other. They follow Bitcoin, and it's the same crap. But you've got a low, and you've made multiple higher lows. You just want to stay above this level right here, that 507.3. You stay above that level with Shiba Inu, you're probably in good shape. It can go down to that level or a little higher, and you're still going to be fine. So any other crypto, if you have a question, ask. If you want me to look at something you're sitting in, you're thinking about getting into, just post it right there in the chat, and I will be glad to take a look at it, break it down for you. Unless it's Luna that got wrecked and lost 100% of its value, basically. If you're messing with that, you're probably going to lose. You probably need to. You've got to learn. That's just not... That was a scammed everybody out all the way, and you want to stay away from it. XRP, a lot of news about XRP lately. On the daily, we've got a nice little like pole and flaggish situation trying to form. And I think if we ever get that resolution from the SEC lawsuit, I think we'll get a very, very short-term rip to some levels up there around, 76 cents. I think XRP can see that again on the short term. Now, longer term, you can see, we're still beat down pretty bad. And it's more of like a big ass triangle. But we've got to get some kind of bounce when the SEC lawsuit is over. But I like it right now. It's showing consolidation on the weekly on top of the 200-day moving average. I'm okay with that. It's kind of doing its own thing. It's not following Bitcoin like everything else does. What else do y'all want to look at? What else can I show anybody? You've got BNB, another one of the major players. And, I mean, BNB respects a lot of technical analysis. Let's reset this chart for you. I mean, right now, we dropped below that 88% retrace from the fib level from the top, and look at us. We're just skirting it. We're kind of stuck between that 786 and 886, just bouncing around because that moving average has done come down, and it's suppressing us. It's going to come to a point we have to do something. We're losing a little bit of positive momentum, not a lot yet. We're not even close to neutral. We're kind of setting to neutral on the RSI. So something's got to happen soon. We've got to have a big leg up or down. Markets only squeeze into these little cones like this for so long, and they have to make a move. So where's it going to go? We'll have to just play it by the day and see. But we're trapped in these levels. If we can get above that 786, real good chance that we're going to run straight up to the 618 at around $388. And you're talking about almost 100% move. That's good stuff from where we're at. So BNB, what else can we look at here for you real quick? This is got Dot. Dot is sitting at a previous consolidation area. They're all doing the same. I mean, what is the monthly looking like? Not the greatest. Go back to Bitcoin's monthly. Now, there's something I like to see. Bitcoin monthly trying its best to lose a little negative momentum while we've got these next week or two that it could be pushing up. So, Bitcoin is trying to show life. You have basically, is this triple? Yep. You have triple hidden bullish divergence on the monthly, which is expected after such a downturn. And a lot of time that can be construed as a bottom or one of, and it was here. Had the same thing happen here. We're kind of showing a lot of staying power right here. It's when you've retraced 88% of the way on any asset, it's never a bad time to buy. If you have patience, you're getting it at an 88% discount. Patience will pay off every single time. And everybody through the history of Bitcoin thought the same thing. Oh, it's dead, it's over. It's dead, it's over. Dead, it's over. It's not. It's just doing what markets do. So I hope that helped everybody just kind of look at the markets from a larger perspective and go, hey, it's not over. We're just in a bear market. It has to breathe. People have to take profits. Economies have to go through cycles, which directly correlates with assets. We had some call outs that popped pretty well today. Bank of America was up really good first thing this morning, and there were some nice profits made on it. What's up, Charles? What's up, man? And then, Snap? Snap had a nice bounce back. We'll get down to these normal time frames here. So that Snap was called out last week. Yeah, we called Snap last Friday on this dump, and knowing that we would see some kind of reaction bounce, took some call positions and had a really, really nice bounce so far today. Let me get my measuring tool and just see what kind of bounce we had. From open up today, we had a nice little 15% rally when it opened today. Not bad at all. We gapped down last week, and that's fine. And when I see that, I like to catch. And if you look back, you'll see we gapped down, made a little recovery about 50% of the way, gap down, recovery. So if you're trying to play some short-term swings, you had, nice 3 days of gains right there. Very possibly, they were probably closer to 15, 20% also. 23%. Those are nice gains over 2 or 3 days from something gapping down. So Snap performed really well today, and probably looking at if the market stays trying to push this rally up, we might get a little bit higher. I'm looking at the $9 to $9.50 range before we get slapped back down again by momentum. So Snap was really good today. We posted a Verizon play today. I believe one was also posted Friday, and it's made a nice little recovery. There were some profits to be made on that. RKT that was posted hasn't done what I needed to do yet, but as you can see right here on the daily, we're about to get back to that neutral area. RKT is just getting murdered. We're trying to set on top of these areas right now, but the sell pressure just keeps coming in and slapping it down. It's just beating it to death. So I wouldn't say that We're going to get no huge rally. We can get a little pop, but longer term, I think you can be okay with some puts on RKT while they destroy it some more. Tesla's bouncing around in a small range from that dump it had last week. I wouldn't be doing anything with Tesla unless you're buying long term, or you're going to put it in your 401k, your IRA portfolios. Sure, great time to buy. Great time to jump on some Teslas. This big M shape right there. That's what I knew. As we broke down into that moving average again, I'm like, all right, we're shorting it, and we did. We're seeing on the daily that we could get a little more momentum. We had momentum up. A lot of buying pressure came in at this level, at this just under $200 level. That's everybody's magic word. Oh, it's below $200. Let's buy. Don't blame them. Don't blame them. So, you're up 10 or 11 bucks from that point. We've just got to, all this is going to hinge on Fed decisions. Let's look at some oil and gas and see if it's going to make any kind of sense right now for us. Yeah, OXY is just beating on that door of 71.85 just multiple times. And if we go out, you can see how heavily the trading was in that area. Occidental, that Warren Buffett's big oil company that he's in, you can see how much interaction with that price it's had over years, its lifetime almost. So you would suspect in a bear market and the way the inflation's going, that oil is going to just keep going crazy due to all the news surrounding it. And at some point here soon, we're going to have to break it. You think we have one, two, third test on the weekly. The third test of that line at some point will break above it and make it support. And I will support that decision because look what we have going on here. If you look at your MACD, you're already showing that you're getting back to positive, neutral, positive momentum. So maybe on this next little push up, we break above it, make it support, and then we'll run to some other levels, somewhere around 86 bucks to try to want to possibly take a little off the table. I think that's going to be where you would look to do that. I mean, that's a pretty nice game. And almost all of them look similar. They're all doing the same thing because of the same environment that we're in. You've got stuff like Peloton, though, if you're just a shorter and you just love shorting stuff and watching it die. Peloton, there you go. That's your watch it bleed out. This is your Celsius/Luna moment. You probably should have already been in it. Probably once it broke. I mean, if you could have caught it below $82, you would have rode a hell of a ride. But I think we started shorting it. Says 21. I want to say we started shorting right about 30. And we have had multiple shorts placed on it. And I don't see any reason to stop. Peloton was hot for 5 freaking minutes. Pandemic-wise, going into that, yeah. But still, people, it's just not a good business model. You can get so much of the same qualities from other products at such a lower price. It's just not hot anymore. That's it. It's done. And either somebody like Google or Alphabet, Google and Alphabet, same thing. You're going to get Microsoft or Alphabet or somebody's going to acquire it, put some of their software in it, use it for data mining and or whatever, and try and cut the cost or whatever. But I don't see that. I honestly see them eventually dwindling down, getting delisted, and then bought up by some third party for just dirt cheap, and then being a very, very niche market once again. Some of the big players, we can look at Google's. Yeah, and this is some stuff I had written from the split, and it did exactly that. It split, dumped. Always does. Everything always does. Momentum's turning positive again. Like I said, with almost everything's going to follow the same path as charts. So you can look at 3 or 4 things and kind of get an idea of where the majority of the market's going. We've got a reaction rally happening. Probably can ride that way for the rest of this week, and then I would be very, very careful and try to stay back. Some of the staples, like Walmart, they've already had their initial bounce and are getting back above their 200-day moving averages, but I wouldn't expect to see a massive rip run. They're going to grind, and that's why they are the staples. Is they have downturns, and Walmart had a nasty one on lower than expected earnings, but they still held up. If you bought before, what was the last time we said it? If you bought Walmart before January of 2020, you're fine. You're still in profit. That's how long it takes for one of these staples to really show any kind of negative momentum, and they almost don't. If you can hold it a year plus, you typically are always winning with the Walmarts, the Targets, the Home Depots, and Lowe's. A lot of the tech stuff used to be that way for 10 or 12 years. And you've got Amazon doing what it does. You look at the life of Amazon. What's the chances you think Amazon's ever going to do anything but over time grow? And it has some nice divergence happening here. Possibly looking at a little more upside this week. We're at that. We're holding tight at this level here, causing a little bit of a stir, trying to make it resistance. But I believe we're going to break it. Too many good things pointing at it. I easily can see Amazon running right back up to that 134 range before we get a rejection off of it. So a little meat left on the bone for a lot of stuff. But if there's anything else anybody would like to have me look at, go ahead and put that in the comments. If you haven't already and you're watching this after the fact and you're watching it on replay, hit the like, subscribe, tick the little bell so you get notifications when I go live. And feel free to bring all your questions, charts, whatever you want, and I'll try my best to look at it, answer it, and walk you through anything that you can think of to ask on these markets. But been live a little over 30 minutes right now, and just wanted to touch base with everybody and a quick rundown over the markets. And if there's not any other questions, then I'm going to be done for the night. If you haven't joined my Discord, it's in the link below. Please feel free to go in there and join up. It's free to sign up, and you'll just get some incredible trade setups from a bunch of great traders, great people throwing around ideas, really awesome community. So go check it out if you haven't already. You can DM me and hit me up on the message, and I can send you a